Today, we're going to take a look at a report from Headset on what the industry is doing in terms of the cannabis market overview and total sales, year-over-year sales growth. So there's actually 5 key metrics that we're going to take a look at from the previous month, being January, to provide you guys with a total outlook on legal cannabis sales throughout the market. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Help us take a look at the industry, what's happening. It's Katrina Glogowski, angel investor and attorney. Katrina, thanks for being back on the podcast.
Thanks, Josh.
So let's take a look at what's happening. First off with total sales. So California actually just kind of blowing everybody away here with $3.8 billion last year. Not too shabby. January alone in 2021, it's 21 already, $394 million last month, almost hitting that $400 million mark. Not bad, because it looked like they had peaked out in September at 360. They were coming down the next 3 consecutive months, and then bam, just right back up.
You know, Josh, I'd be interested to look at the data behind that, because that's almost $100 million increase. And California is a pretty established market. So what made that change? We can't say it was the pandemic, because the pandemic's been going on for a while. I'm unaware of any radical new cannabis product that would drive new consumers. So what's the data? Mm-hmm. That's interesting.
So moving on to Colorado, $158 million for the month. Nevada, struggling without tourism, is down to 62. So not very good, but it looks like it's kind of leveled out. They started, they had their trough in May in $39 million last May, and they've kind of been slowly stair-stepping that back up. But as of September at 61.6, they're leveling out. Very similar to Washington, actually. It's just that Washington has more. We didn't really struggle so much. We kind of go out and buy what we want when we want. But we're consistently over $100 million. So I'd rather have that kind of consistency than this up and down crazy stuff you're seeing in California. But I'll take the numbers out of California, just not the volatility.
Well, this shows you how important tourism is to the Nevada market. That is just unfortunate, given the volume and expense that the Nevada licenses just, we heard $10 million and more for just the license in Nevada, in reliance on these tourism dollars. And nobody, of course, could have predicted the pandemic when those licenses were issued. But at the same time, the numbers are very telling. The established markets, the growth markets, and markets that are stagnant when the fundamental demographics change.
Yeah, I think that somebody in Nevada that had bought a license is going to have to redo their timeline. It's going to take a lot longer to break even and or profit than they thought, but long term, I think it'll pay off. It'll still be better than being in New Mexico, for example, some other state that's out in the middle of nowhere. Without the tourism, Nevada would be just a desert, right? So not as good as Washington, but Washington is that petri dish experiment that we like to trash talk here on the podcast. But during the pandemic, it's looking like a bright spot because it's so consistent.
Yeah, definitely a stable market.
All right, so moving on to some northern neighbors of ours in Canada. So Alberta, they received 56.1 million in January. They're kind of just creeping up, as of any new rollout should. British Columbia, on the other hand, they dipped a little bit, so down to 36.8 million from 38.5.
38.5 to 36, 2 million. Yeah, it is a troubling statistic, but I think that $2 million could be translated to what the discretionary spending is after the holidays. I'm not concerned about a $2 million dip, but I'd like to see British Columbia be a little bit higher.
Yeah, so would I. And Ontario as well, at only 68.8, they're hovering around the same as Oregon's sales, which is not very good, being that Toronto is out there. They should be having a lot more sales. I guess Tokyo Smoke is going to open up 9 more stores right now, so they're expecting some increase in sales and anticipation, but we're just not quite seeing it yet. Maybe that's because of slow rollouts, or um, they weren't deemed essential. And I think that was more of Labrador and not so much Ontario, but the mandatory Ontario government owned stores may have caused some issues. I don't know. There's obviously something going wrong with Ontario, though.
Oh, Ontario has been a hot mess since legalization.
Yeah. Well,
Ontario.
Saskatchewan is interesting. I mean, they only had 13.2 million and they're really small, but I think that is actually a really good indicator to see what middle America is going to look like. That's kind of what reminds me of Nevada without tourism. Is when you go to Wyoming, you don't think of cannabis. So that's what I think Saskatchewan's sales at 13.2 is what I would deem South Dakota, Wyoming, all these like teeny little areas, outside of the city. That's probably a good indicator of what your sales are going to be in middle America.
Yeah, but even Saskatchewan is steady. Uh,
Yes.
so I'm always suspicious of spikes, either downward spikes or upward spikes that are unexplainable. And so Saskatchewan is a nice, steady player, just like Washington, nice and steady. And the steady markets become predictable. You don't do your finances or growth plan based on a 1 month spike.
Mm-hmm. And then Oregon, so Oregon's on track to get $1 billion. I'm missing a couple of months here, but apparently on record to reach $1 billion in 2020. So according to MJ Business Daily, Oregon last year, with the vast majority of transactions coming from the state's recreational cannabis retailers, coinciding with the pandemic and mirroring record sales in other legal markets. The Oregonian reported that total cannabis sales in the state rose from 795 million in 2019 to 1.11 billion in 2020, based on data from the Oregon Liquor Control Commission. Not too shabby there. So Illinois is also projected to exceed $1 billion this year, and Colorado's 2020 numbers were outpacing all of 29's, so they could also be on pace for $1 billion. So it could be Illinois, Colorado, and Oregon all surpassing 1 billion, and then of course California at 3.8 billion.
Well, maybe all of those total addressable markets are that we've seen are correct.
Right. That is a big assumption. All right, so taking a look at year-over-year sales, we can see the impact from the pandemic, especially in places like Colorado and hard-hit Nevada. Year-over-year sales in California, you can kind of see that they were pretty much coming down from May. They were only at 42% from 77 in April, so kind of coming down. And then finally, again, this January, seeing a nice pop. 33% year over year instead of 14% from last month. But all of these year over year sales growths are fairly leveling off, it seems like. So Colorado only had a 36% growth, which is great compared to a negative 8% in May. Nevada, 12%. It's not great, but it's better than negative 23 that they had in June. And then, our consistent, steady Washington sales growth, 20%, has been coming down since June's 30% high.
Yeah, I think this just is another chart establishing the importance of tourism to Nevada.
Yeah, absolutely.
That would explain the huge spike in the dip, actually, not spike, in June.
All right, so year over year sales growth for our northern neighbors in Canada, Alberta, 73%. So it's starting to come down. Year over year sales growth may be that they're peaking on their growth there. British Columbia definitely down. That seems weird. Ontario, on the other hand, still going up, and then Saskatchewan's got this weird kind of just flat pattern, not really going anywhere. But to give you the numbers, 77% growth in Saskatchewan, 158% in Ontario. British Columbia is 93%, which is down from 197% last month for their year-over-year sales growth. But I mean, still not bad though. I mean, it's really, really high. Oregon, if you want to look at a more mature market, is only 35%. That's probably pretty normal versus the 195% in Michigan. And then, Illinois is just off the charts at 341%. They easily are spending the most money. Although California is generating the most revenue, people in Illinois are easily spending the most. We'll see that with the next graph here with the average basket size. But yeah, Illinois is still trying to grab as much cannabis as they can. It's still very, very new to them, still a novelty.
Mm-hmm. And what about the proximity of Chicago to other non-legal states? That might drive some of that growth.
Right, just like Washington saw from Idaho and Oregon coming in and buying. I think we're seeing the same thing with Illinois there. Moving on to average basket size for California, it's $66.96. And that's probably because the average requirement for delivery is, I think, $65. So just $2 over that average, and fairly flat, and has been around $65 to $70 since May of last year. So give or take a couple of bucks. It looks like people are kind of making their purchasing decisions around delivery.
That certainly explains California.
Colorado, they saw their peak in August at 66, 67, and then last month it was down to $60 and change. Nevada also seeing kind of a downward stair step trend down to $59 and change on average for those that are still there buying. Washington, like we mentioned before, fairly flat, so $34.50. It's been that way since May when it was just under $35. So nothing new there. Kind of buy what we want when we want to buy it.
Especially in the absence of delivery. I mean, if you're going to go, you can go once a week or several times a week or however you're going to proceed.
Mm-hmm. Looking at average basket size for, Illinois, $111. It's $110.97 for the average person walking into a store in Illinois. That might get you a full gram of concentrate or a 1 gram vape card or something crazy prices. They're probably still $60 to $80 out there. So that's got to come down and will come down substantially, but pretty high there. Another new market is Massachusetts, $94 and change. Michigan, $80. So pretty high. Why do you think, I'm going to put you on the spot here. Why do you think it's so high for a new rollout in the US, and that you have new rollouts in Alberta and British Columbia and Ontario and Saskatchewan, and they're all like half? So Alberta's average is 47, British Columbia's average purchase price is 44.5, Ontario, $50, and then 47.5 for Saskatchewan. So they're rolling, pretty much the same as Oregon, when Oregon's like, we buy what we want when we want, $40.05 on average in Oregon. Why is it so much higher in the US for new rollouts versus our counterparts up north in Canada?
I think it's a combination of things. I think that newer markets, by their very nature, have higher costs. We saw $250 grams in Washington when rollout first started. And so there's not a lot of leveling of the price in these newer markets. And so that can explain some of the higher baskets. Also, I think there's some novelty. I've never had a chocolate before. I want to try it. I've never had a gummy before. I want to try it. What's this vape cart thing? Also, as newer markets attract new cannabis consumers, those cannabis consumers also need the various accoutrements associated with it. You need a grinder, you need a bubbler, you need a vape pen, which can also account for the size of the basket. So I think there's two things. The first is the general price of the product until supply and demand sort of level out and competition comes in. We can always point to the $2 pre-rolls here in Washington. And second, like I said, you need the novelty of trying new things as well as the necessary equipment to engage in these experiments, Josh.
So now we're going to look at the count of baskets here. And for the definition here, count of baskets is total revenue divided by the total number of transactions. So this is kind of a profitability metric. So based on Headset's metric of count of baskets, it looks like California is still the most profitable market that we're seeing right here at 5.8. So that's revenue divided by total number of transactions at 5.8. Colorado is sitting at 2.6. So for every transaction, they're making about half as much money. Nevada's at 1. Washington, on the other hand, 3.4. So not bad in terms of its pricing. I think that's probably a pretty good market right there, like right in the middle.
Yeah, that's just showing yet another graph establishing the importance of tourism to Nevada, but also you don't see a wide variation in Washington. There's a little bump in Colorado, but Colorado's pretty steady, and you do have an outlier in California for January of 2021, but generally it's pretty stable. And this graph makes you think these differences are huge, but they're really not. The graph goes from 0 to 6, so it's not that large of a difference even between Washington and Nevada. It does affect the profitability of a cannabis business, but it doesn't really indicate these huge sweeping changes between the highest California and the lowest of Nevada is still only 4 million.
Yeah. Well, it's interesting. So I said in the beginning that California was the most profitable market, but that's because it takes less people to make this much money, right? So Nevada, based on volume, if they have a lot more people coming through, then they could raise the amount of revenue per basket or the count of baskets. I'm guessing that when you go to Nevada, you have novice people who are spending maybe $10 just to try one thing. They just want to try it once and that's it. Whereas with California, they're going all in. That's the culture. It's one of the oldest cannabis cultures out there, and they're definitely maxing out on their delivery fee or delivery minimums of $65 or whatever it is. Versus Nevada, it's not too profitable per person, but when you add volume to that, and you have a lot of people coming in wanting to try it, you can make a lot of money. But it's not really profitable per person so much as California is.
Right.
All right. So again, moving on to Canada. Looking at the count of baskets in Alberta is at 1. British Columbia is 0.8. Illinois is pretty low too. So that's interesting that they're spending $110 per person in Illinois. But I guess that means that they're not making as much revenue. So it's still the costs for ingredients or whatever else. Cost of goods sold must be really, really high still, even though they're spending $110.
That's what I would assume, because the population of Illinois should not drive that number. So it has to be the price. That has to be the reasoning behind the numbers that we're seeing. It's just overpriced. But Illinois is a newer market, and the price will stabilize just like Oregon and Colorado and Washington. It will stabilize. Mm-hmm. And you're always going to have California be the front runner, always, just by sheer volume alone.
Yeah, so it seems like Oregon is a lot more competitive than Washington. 2.3 for the count of baskets. That's the revenue divided by the number of transactions versus Washington. at 3.4. So Washington is a little bit more expensive. You can get ounces in Oregon for 30, $40, and you can't really do that in Washington outside of like a 420 deal or something that you don't necessarily want to look at or smoke. Michigan, Canada basket's 1.1, Ontario 1.3, geez, Saskatchewan 0.2. Like, they don't even buy anything there.
You're talking about Saskatchewan, so.
Concentration, yep. I find interesting because it really is what's showing a mature market. And so the less concentration you have, that means that you have a lot more competitiveness. And so it's nice to see that California is a stair step down pattern. It bounced back up in January. Maybe some companies didn't make it to the end of the year, or maybe there was some consolidation. But either way, California's consolidation or concentration was at 26%.
You know, Josh, I wonder if there's a correlation between this chart and that big bump that we saw earlier in California with larger cart size, larger basket count. I wonder what happened in California, if there was some new product, new brand, or something to have an outlier in January.
Mm-hmm.
I don't know that much about California to say if there was a new product launch in California. Did a new county come on?
It could just be that. It could be new stores coming online. Could be a lot of things. I think we saw cookies and GTI. So we just did a Green Thumb Industry pitch deck review. They're working with Burners Cookies brand to open up a store in Nevada. That I would think would draw in new people. Just like for whatever reason, when you had Krispy Kreme donuts first open up, or whatever new fast food joint, whatever, you know, people just, I don't know, they just stand in line forever and wait for this stuff. It's crazy. But they did that for Sean Kemp's, the Seattle Supersonics basketball player. When he had his storefront, there was a line deep, like I'd say probably a mile. It was at least 4 city blocks.
That line was ridiculous.
It probably took hours. I saw it and immediately just turned right back around and was like, not today.
For the same weed that you could have got at a competitor in 5 minutes. That's
yeah. I mean, the advantage is you did get to meet Gary Payton and Sean Kemp, but not. I didn't, because I didn't stand in line. Moving on to brand concentration in Alberta, it's fairly new, and this is interesting because it's at 40%, and so is 43% for British Columbia. So Canada, not too competitive, not too many stores that were able to open up. Still fairly new on that 2.0 maybe. People didn't want to jump in too soon, afraid of regulations. Don't really know, but based on the information I have, which doesn't include Illinois or Ontario or Saskatchewan or Michigan, but our northern counterparts are still fairly high. I mean, not twice as high as California, but it's getting up there. Twice as much as Washington. They're double what we are here in Washington, and they're only 3 hours away. So,
you know, we'll see what happens. I'd like more data on the brand concentration.
Yeah. All in all, it's fairly interesting to kind of keep track. And so I'll kind of get rid of 2020 next month. I just kind of wanted to show you what was happening in 2021 versus last year. We'll start with the clean slate and just show month over month next month with the data. So I want to thank my guest, Katrina Glogowski, angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.